usually the M&A guys are more interested in the actual transaction to find the right buyer, the right package, the right price to get speed through this process.
Welcome to a brand new episode of the M&A Mastermind podcast presented by Cornerstone International Alliance. I am your host, Nick Olsen. On this show, I get the opportunity to talk with the brightest minds in lower middle market M&A. Together, we discuss industry intelligence, deal management, shared successes, specialized expertise, and much more. If you serve the small to medium-sized business owner, this show will offer you tactics and insights you can use and implement now to become a master in M&A. Hello, everybody. Welcome to a brand new episode of the M&A Mastermind podcast. My guest today is a global trusted advisor. He has built, bought, and advised businesses in more than 50 countries across the world. He focuses on his family office, as well as running Sandvall and Partners and developing AIM, a holding company focused on acquiring and multiplying the value of profitable companies using sharp strategy and practical AI. He is the host of the long-running Invest in You podcast. Make sure to check that out. In his spare time, he likes to travel. He's been over to 100 countries in his life and more, hopefully in the near future, as a technical scuba diver as well. Please welcome my guest today, Fredrik Sandvall. Fredrik, how you doing?
Absolutely great. Thanks for having me, Nick. And I said before we hit record here, I spent too much time with Nick because I listened to this great podcast before. So yeah, here we go.
Well, I appreciate you tuning in to my show. And you and I have an episode coming out on your podcast in the next couple of weeks. So make sure to check that out and tell us a little bit, just to kick it off, what is your podcast all about and what is the premise of it? You've been doing it for a very long time.
Yeah, so I started off, and that's probably the most important part why we got started, with my two sons. At the time, they were like 10 and 12 years old, really young. And I wanted them to meet interesting people like yourself. So they met like millionaires and billionaires on the air, interviewing them and learning about stuff, again, from people that they wouldn't meet otherwise. That's how it started. Investing in you is holistic about health, wealth, and happiness, whatever that means. Over the last few years, been more and more high net worth individuals, entrepreneurs, founders. A very high percentage of our guests have actually written books, and they are in their own right some kind of key influences in their space. And yeah, we really like it. Lately, they've been too busy with their own things, flying solo, like when we spoke, for example, Nick. But no, ultimately, it's against all business advice to go broad. You should get super niche. But again, I'm doing what I find interesting, and that means that people can join me all over the world, meeting really interesting people, and see through my lens how you can explore opportunities everywhere. And that's it. Check it out. Invest in you.
Yeah, that's one of the big reasons I started my podcast. Was just to meet interesting people, have conversations you would not have had otherwise, and be able to just promote those guests that you bring on the show and share their expertise with your audience. And so, definitely in alignment with those reasons as a great way to do a podcast. But so, when you look back, I guess before I ask that question, tell our listeners a little bit about your background, what you're doing, what you're into. As we just said off camera, you are very busy just because you are involved in a lot of different things. What are those things? Tell us about them.
Yeah, so number one, I'm a proud dad and father, far away from my kids. They are in Sweden, where I'm born. I'm out in Asia at the moment, trying to make the world a little better step by step, while doing deals and helping people all day long. So I come from a military background. I've been working with intelligence, operations, special forces, and that's brought me to many parts of the world. And I transitioned into management consulting. I've been investing and running companies for well over 25 years. And as part of management consulting, coaching and helping other people to become like financially free, you learn a lot from their mistakes. And the more people I help, the more liberated I feel myself. I like extremes. So one day I am in a 5-star hotel, maybe having a fantastic audience of hundreds of people or 1,000 plus. And the next day I am in a not so nice place in Africa under a tree, tired and hungry, and everything between. Otherwise, I wouldn't feel alive.
Yeah, sounds like obviously, as I said in my intro, you're very well traveled, been to a lot of countries.
Yeah.
But when you talk about, you look back at where you've been and whatnot, what What really pulled you into, what interests you into buying companies, maybe as opposed to starting them from scratch?
Yeah, so I have been starting a number of companies, almost like 10 different companies from scratch, mainly in real estate. And to build from ground up, it takes years, especially like property is a fantastic example of real estate in the US. The best thing to do in terms of property, like buy and then wait, not like wait and then buy. And I've been doing a lot of that. So the waiting part of running a business and also tedious. So to allow things to accumulate, to get the right team, to avoid the churn of staff, to grow. And pretty much everyone I know have made the most money in their lives when they've sold the business, not when they bought the business, not when they grew their portfolio. It's ultimately when they got like liquidity events, like big cash events, and then reinvesting or diversifying. And why not set up a system where you have like, man, we're all different, but one way to do it is to hold a number of companies and to allow it to churn. You might sell one per year, and you have more than a handful in the growth phase. We'll probably dive deep into what I do right now later in terms of partnerships. But when you sell a business, you usually take not one year's of profit, usually multiple years if you set it up right. And that's really what Nick is helping many business owners to do, and the same from my side. But I can also sometimes be on the buying side, not only helping the sellers. So yeah, that's it.
What when you're assessing a company, you're looking at it, hey, is this something I want to get involved in? What are the things that matter to you the most? Is it, the numbers, the people, the market, the industry, the location? What do you value most when you're assessing these companies?
Yeah, I think it's the people behind it. So the whole trust aspect is super important to me. Many years ago, when I did the dissertation in school, I did it with on one side you got the venture capitalist, on the other side you got like the startup founder, and this information asymmetry. So the founder don't want to show the skeletons, and the VC owner would like to see the skeletons. And there's lack of trust, hence you don't get the full value for the entrepreneur, and the venture capitalists like to hold money back because what if? And this coming back to your original question, like what do you look more upon? It is the people, because still today AI is not fully developed yet. We need people to run businesses. We need people to deliver services or products and to sell, which is also one of our core focuses, how to grow and sell more and better and sell profitable. So I look first on the people, what they're doing, package in the right way. Can I scale? Because I love the growth levers. So if you buy something or if you help a customer, how can you make them to multiply what they're doing? That's super exciting to me. So yeah, that's what I'm looking into. Of course, the numbers and everything else, but first and foremost, the people.
You're working on a global scale too, and so just from a geographical perspective, are there ways in which you go about, looking, assessing these businesses, and where are you looking, and what areas of the world do you feel like are target areas for you to invest in these companies?
Yeah, I would say like overall we've got the same issue all over the world where with an aging demographic. So that is the massive opportunity on the buy side. And that's also the challenge on the sell side. There are more companies that need to change hands. So again, it is still a buyer's market on a high level. So come back to geography. I focus mainly in countries where I can do business in English. It's the language of business and it's very helpful. I'm quite agnostic in terms of like where it's more like opportunity driven. I would love to have global reach like you do with the CAA. So you got partners all over the world. Same way there. I like to have business reasons to go to Singapore, Australia, China, US, Brazil. Why? Because it's kind of cool to be able to travel the world and get paid for it. I've done it for many years. It's kind of addictive.
That's why you've been to over 50 countries already, or 100
Yeah,
countries already, and deals in 50 of them.
exactly.
Well, we'll have to find a country that you're looking at. Maybe you don't have any presence in, and we can see if we can work something out for you.
Yeah, exactly. Yeah, no, I love good food, nice people, and good weather. Yeah, the criteria.
Yeah, you're not gonna want to come to Wisconsin in January with where I'm at right now because it is cold.
You got
It
some
is
really good
cold.
tax rules that and good company setups that I like.
Yeah. Okay. Okay. Well, then, if you do want to buy in Wisconsin, you maybe want to come in January to see if it's worth it.
Yeah, yeah.
Do you have an example of an acquisition that maybe you made that, you know, really surprised you about just, I don't know, how much opportunity there was as far as growth goes and whatnot? Do you have an example of something that comes to top of mind that it's like, wow, this is amazing?
Yeah, so I shared an example which felt amazing that turned out to be not so amazing later. And the reason why I share that is so everyone can be aware there are minds everywhere. Again, the guy, the main person, I'm not trying I won't drop him, throw him on the bus. I'm just going to share principles. So again, an industry leader is on right, really, really good. Everything looked fine on paper. One red flag, which I kind of ignored at the time. And then fast forward like 1.5 years, it cost me quite a lot of money because of the initial good rapport that just led us into do a transaction too quick without the proper due diligence into the deal, deep into the finances and deep into the relationship. I like to share that just as an example, how things on the surface might look really great, but don't forget, despite the initial love in the deal, to dig deeper. That's probably a key learning I like to leave everyone with because it costed me many hundreds of thousands, completely unnecessary. I could have avoided it because it wasn't worth the time or the investment. Of course, in hindsight, with the money lost. So I'm dropping that one instead of respond to your real question. Hope that's
Yeah.
okay.
No, it's always good to learn from those challenging opportunities,
Yeah,
and I'm sure, like you said, moving forward, you're not going to make that mistake again.
exactly. Yeah, yeah, spot on.
Yeah. And so you mentioned, you like selling companies too. So are those the companies? Are you talking about those are the companies that you've invested in and looking to grow them and sell them, or are you actually helping business owners who maybe you don't have a equity in sell their companies as well, much like our audience does?
Yeah, I'm absolutely doing both, and let's focus on that because that's got most of the audience. So in terms of helping people on the sell side, we got the same pretty much all over the world. We got the people who is just keen to get them to sign the dotted line to get the exclusivity, maybe a brokerage just put it out online without doing too much work. To the really hands-on work with roll up your sleeves and get their hands dirty and really help the seller to get maximum value by positioning right, maybe working long term as well. So you got the whole range, and I've seen it all. I usually either introduce to someone like you who's on the professional sell side, or if they like to scale up first, then I usually help in that process to increase the exit ticket, so to speak. But with a huge network, that means I have a lot of family offices, private equity, who can be pretty much direct to the sellers by working with someone like myself. So again, working more narrow than you would if you would look on the sellers. At the same time, having access to many people like you, Nick, and advisors in many parts of the world. So that helps a lot. So yeah, I hope that responds to your question.
Yeah, how are you doing business development? How are you coming across these opportunities, especially on a global scale? And what are answer that question first.
Yeah, okay, fine. So I am in the beginning a strong salesman. I'm not afraid to pick up the telephone, cold outreach, knock on a door physically, drive up or as a joke, use my intelligence operating skills to get basically into the boardroom past security and try to like point out that, well, you might want to do something about your security. And by the way, would like to sell a business. So I'm doing everything very manual, well old school in terms of outreach. I'm using technology to create lists. I use technology, social media to have a flow. I used to have a massive deal flow up to like 2019 in real estate, and I very much transitioned that into business as well. Also, I've been pitch investments for well over 15 years where people bring me stuff because I'm very visible on podcasts like Property TV in the UK, as well as on stage and strange places all over the world, and just pop up and keep producing content so people can spend time with you. Hence, they feel like they got a relationship to you. Just like I said, I spent too much time with you the last few days on a mountain. That was literally the podcast I was listening while doing physical
Love it.
exercise. So people that find you and can relate to you, and they see that you actually get as done, that is where deal flow starts to happen. Same with like brokers, when they see that, okay, this guy is actually finishing the transaction, or this girl is actually delivering on the promise. That's really where you get opportunities more and more. Even if you might not be the buyer, you help them to get access to funds. So another thing I really spotted many years ago, that most companies, this is probably my best skill, I'm very good at finding money. And that is really good. That's sought after by
Very good skill
venture
to have.
capitalists, by property investors, by basically everyone, one way or another, is raising funds from banks or pension funds. I've done all of the above, and that is also really good. That gets me into deals sometimes, like as a funding partner. Even if I don't bring the money, I bring the money, if that makes sense.
Yeah, I mean, I think just having an integrated network of people that you build over time, I would guess you'd agree that spending time investing in people around you, investing in those relationships, might not bear fruit right now, but down the road, you never know what's going to happen. And
Yeah,
I
exactly.
think developing those relationships, is a long-term play, and it's a way that you can get yourself in opportunities that maybe you wouldn't have.
Yeah, and to build on what you just said there, you can also have like transferable trust. So you might trust me or someone else, and therefore you're giving like a warm recommendation. That's so much easier and better to, for example, people, a family office, for example, if you would introduce me, like, at least you should have a chat with this guy without even saying nothing more. You just open the door and I can make my own impression. Things like that is super important if you go from the millionaires up to the multimillionaires, so like high net worth, ultra high net worth, and into the billionaires. The only way to get in there usually is to get someone to at least make a little angle to the door. Otherwise, they like to play with the like-minded, and if you come across as like-minded, then you have increased your chances to find that funding partner that you might be looking for.
You had mentioned technology a couple of times. What are you using AI and technology for in the companies maybe you're investing in, or in, like I said, you talked about outreach. Like, what is your stance on, and what are you guys doing with AI right now?
Yeah, I see AI as a huge enabler and a multiplier for individuals, teams, and companies. You can save so much time. And so, for example, I use this to produce content, to help with policies, to document, create SOPs, basic legal scratching the surface as well. So I was just looking into taxation for partnerships across states and across countries just before this call, and I found an impossible tax solution. I couldn't find a workaround. And then uh, I did find a workaround, not thanks to AI, but because of my business background. I found a workaround to not pay tax and still control assets in a super clever way, also in the US. So, yeah, back to the question. I love it. I am investing right now, creating a group of AI enabled companies. So there will be a couple of pure AI SaaS companies, a number of AI consulting services. So they're providing AI as a service, and there will be a number of normal blue collar companies that can be really superpowered by those companies within, and thereby be building a group that is growing fast in this very uncertain world. And another way to do that is, if you think about like the whole market in like three tiers, you got like the traditional blue color layer, and there's no judgmental in that, and then you got the white color, and then you got like the very much the top performers. I see AI disrupting a lot in the blue color. I see a lot also in the white color, where we will see things change a lot. Which means if you can be one of those top players that got an audience to attract the right kind of companies and partners, that means that those blue collar companies that lean into AI, and those white collar workers that and managers all the way to the CEOs, that's still white collar, that take the advantage to multiply themselves and their performance, they will really excel over the next couple of years. And I would like to have a whole company of companies excelling together as a partnership. So that's really what I'm working on right now. So instead of like buying companies, getting companies to partner. So think PE game. So instead of having like one company which might trade at like a 3-4 multiplier of a EBITDA, you might now have like 10, 20, or more than 20 companies working together. That multiplier, exactly the same businesses, just loosely arranged with a top layer of management without too much integration, will be pretty much doubling just by the sheer size. And very interesting to any kind of PE buyer right now. PE and the venture capital as well as family offices are all looking at AI-enabled things. Same with like you have got so many sophisticated strategic buyers right now who would love to get their claws into a company that actually have understood AI. So it's super exciting times, very disruptive, very hard to value companies right now. Very hard.
This episode of the M&A Mastermind podcast is powered by Cornerstone International Alliance, where leading M&A firms come together. As part of this international network, you get access to global opportunities, over 200 M&A experts, enhanced collaboration and knowledge sharing, and some of the best M&A tools and resources available, all to help you take your firm to the next level. Ready to join this exclusive network? Visit cornerstoneia.com/new member today. Well, and that's what I was going to ask you, because you're obviously diving head first into this AI thing, it sounds like, and you're learning more each and every day, and it changes all the time. From your experience, how has AI affected positively or negatively, values in companies that you're seeing? Maybe what are you looking for in companies? Would you rather have a company who hasn't adopted AI at all, where then you can inject, your own tools in there? Or do you want to see a company who's already, gone down the path of AI integration into their company?
Yeah, we are so early, so both of those would absolutely work, but it's more a mindset. Like, is change okay? Will you embrace change, or are you trying to hold the ground like it's stuck? We are set in ways. That doesn't work at all. But with those two options, I will be very open to owners on any of those. And just to give you a case study from earlier today, I was doing a napkin valuation of an AI services business. So I built my own AI agent, which has helped me to value that puts all the traditional technical matters into mind, but it's also trained on my super conservative book that's coming out in January, which is called like the Abyss of Finance, which is talking about the risks and the risk of being so highly valued and geared, especially the AI companies. So putting that together to get a valuation to help those out there, advisors just like you, AI SaaS business. If you assume you've got recurring revenue, so long-term contracts, that has got fantastic multipliers, everything from like I've seen from 10 to more than 25 on relatively startups. Whereas AI services companies can be as low as like 3-4 times value, because again they might not have long-term contract, they need to win new clients all the time, so they're basically treated like a consulting firm but in a good market. So but they're still not benefiting from the valuation multipliers yet. That is my experience so far. But just putting AI on the website or the business card or in the business name, it's like the .com thing a long time ago. That fad has almost passed. You need to be able to explain how you use AI more than yes, we use ChatGPT as a browser at work. That's not good enough, but you need to show evidence or automation, evidence of integration, show that you are doing like streamlining processes. So without talking about the company, I said I'm working with quite a lot at the moment. I am helping that organization to automate the whole layer of operations using AI and tools, basically to make the manpower, you could literally slash it by 75% just by that. Not saying that that's going to happen, but by automating unnecessary duplication, copying and pasting, and old ways to do things, you can free up time to do better things with your team.
And which is obviously very valuable for a buyer to look at, that automation, being able to, whether you're, cutting costs or just making people even that more better, I guess, for lack of a better
Yeah,
term, than they
yeah,
could without AI. I think that's always, so if we can be more efficient,
yeah.
then that's a win. And obviously you can't ignore AI right now too, because, and I would imagine that's a big red flag for you as a buyer. Like if you're trying to avoid it or just not thinking about it or not addressing it, I would imagine that's not a great, trait in a business that you wanna invest in.
Yeah, well, it depends on the people if they're like open-minded, but there's usually it takes like a whole change management process to integrate it. It's a big change, but usually you can show how people can get like easy, quick wins, and all of a sudden you can win people over. So I know a lot of consultants do exactly this job, like come into a business, show them how they can get an easy job, and even winning over the hard resistance movement. All of a sudden it gets more interesting and fun. But I can also see how many organizations, including the one that I mentioned that I'm working with, reducing the headcount because of AI, financial constraints, and other things.
You mentioned that you'll even do some planning or some exit planning work or preparation for sale. What are some things during that time that when you're working with a company, maybe a signal or maybe it's a thing or two that you look for to be like, okay, we've achieved these couple of things. Like I think now is a good time to look at going to market. Like what are those things you're looking for?
Yeah, I mean, ultimately, rewinding a half step back to have this owner's financial advisor, even the the attorney, the home guy who's been with the company forever, try to get them aboard in terms of this process without telling the whole team. So with that in mind, I would say the best time frame to plan this is at least like a year or up to 3 years in advance to get things and valuation really right. But coming back to your point, like, okay, this is now the peak time of the year coming up right now. Why? Because as this has been recorded with Christmas, holidays coming up, people get away from their business, whether they like it or not, and spend time with the family. They reevaluate things, and all of a sudden it's January, it's dark, it's gray, it's not so fun to start. That's the peak time when people are like, okay, I like to sell my company, and they might never have thought about it before, but right now I'd like to sell, which leads into the big headache. Most businesses are not sellable like today, so they don't have the finances in order or anything else for that matter. It's super owner dependent. Um, so very often when I have this absolutely first conversation, probably exactly as you, Nick, where people reach out to you, they reach like a decision point, like I need to change something. The misconception is they might know people who've been selling a very highly functional, profitable business for making maybe a high multiple, or they might have spoken to a broker who put the completely wrong number in their mind, which means when you or me are talking to them, they might have a valuation which is like 2, 3, 4 times higher than what's achievable in today's market with the state of the company. That is causing some headache to to retrade the perception, which is really hard. So that's that. I couldn't go on all day long, as you can hear. Give the question back to you, my friend. What would you say? The same question. How would you say that people come to you? What's your same question back to you?
Yeah, when's a good time to go to market? I think yeah, like you said, you hope there's been some work done if they're coming to you. As an M&A advisor, you want to understand the value, you want to understand the structure, you want to know all the things about the business. So I think you want to make sure that you're in alignment, first and foremost as to the value. And then if the value isn't, you know, us as an M&A advisor and to the client, if we think the market bears, X number and that's not in alignment with the client, then that's something that you got to go to and understand and unpack as to, okay, we think it's this, you think it's this, like where's the gap here? Why do what ways can you enhance the value? Or maybe there's another story to tell that maybe as an advisor you don't know the full story, so maybe the valuation could be adjusted based on now diving in deeper with the client, understanding everything about the business, and maybe there's some other things that can attribute to the value and whatnot. But with that being said, you look at the common things, but you know management team in place, all that sort of stuff. And obviously once the numbers match up, then then it's like, okay, what is the reason? What is their why? Why do they want to get
Yeah,
out? And
good
so
point.
that's a big question to unpack as well. And that can turn you in a couple of different directions. But, once those numbers match up, and you mentioned tax, tax savings, you got to have that net number after taxes has to
Good
match
point.
up with the lifestyle you want to live after the sale, right? And if you're thinking you're going to get 10 and I can live on 10, but then, after taxes, it's
It's more like
7.
6, 7.
Well, that's 6, 7, right? That's a gap
Out.
that you need to fill, right?
Yeah, yeah.
So, I think, a big thing is the valuation and what we think we can get from the market has to match up with what the buyer needs and wants to get out of the company.
Yeah, I mean, you kind of alluded to it, but to have multiple of those specialists in the extended deal team, like the tax guy, the financial advisor, and of course, my perception and my interaction with most guys in the M&A space, most of them are focused on like the transaction, and that's, I think, is the right thing to do. We've got other people who are more like long term. I know many friends also specialize in like the growth cycle and preparation to sell. For those listening who are not in the M&A space, usually the M&A guys are more interested in the actual transaction to find the right buyer, the right package, the right price to get speed through this process. So you're pretty much expected to have done some homework before you can engage an M&A team, in my view, early, have the conversation and say like, okay, fix A, B, C, D. And you might want to talk to Bob over here. He is really good at this. And then come back and we'll have the conversation. We keep having coffees every quarter. And then in 1.5 times, yeah, you are in a fantastic position. You added those 3 missing millions, and now we can sell it for 10 after tax. Please correct me. Am I wrong here, or what do you say? Because it's slightly different countries and different companies.
Yeah, absolutely. I mean, you identify the things that we feel can grow the value and,
Yeah.
however long it takes, whether it's 12 months, 24 months, let's put in the work, whether it's, your M&A advisor helping you or, they connect you with, an exit plan or someone who's a business coach or who can work with you on that. And then, yeah, hopefully you're doing the work. Business numbers are still, trending in the right direction. You've done the things that we've identified as gaps. And then, yeah, the idea is, in that time frame that your company will be as valued as what you want, or maybe hopefully even a little bit more if you're doing it correctly.
Yes.
And
Yeah.
that's really. Go ahead.
No, I was sidetracked. Carry on, please conclude. I'll finish my point in a moment.
Well, and I was going to say too, you hope that the business owner doesn't have to sell now because, you hate to see those situations where I have to sell for health reasons or whatever
Yes.
other reasons might be out there. And you're not getting the amount of money that you hoped you were going to get out of the business when you did have that eventual exit. And so I think disclaimer here, plan and grow your business like you're selling tomorrow. And whether you're selling tomorrow or in 10 years, your business is going to be better for it.
Yeah. He had pretty much a masterclass on my podcast where he shared the whole package. So yeah, absolutely.
If you want to hear more, tune into Fredrik's podcast in a couple of weeks and you can learn all about it.
Cross promotion. No, but a really nice little trick is not my idea. You probably have done it sometimes yourself. When we have that initial conversation with that seller of the business, the founder, owner, they might have a number in their mind, which might be the right or wrong, doesn't matter. Try to capture that on a piece of paper and put it away, because later in the process, you might have offers which are way over this, and they might be greedy and say, oh, let's hold out. With today's market, it's just like COVID in a way. If you got a deal that you can close it today because you never know what will tomorrow brings. Yeah.
I've heard too, Fredrik, recently, some stories of, I talked to some business owners like, I wish I would have sold 3 years ago. So that poses a really interesting question, because I think on the flip side too, it rears its ugly head as well, where, I said I can get you 10. We went to market. I got you 18. Okay, well, that's amazing. I never expected the 18, but now I'm going to get greedy. Can I get 24?
Yeah.
And
exactly.
so, like you said, I think it's a good exercise to just Hey, understand when we went to
Take it
market,
now.
we were looking
Yeah.
for 10. We were looking for 10, right?
Yes. Yeah.
I got you 18. I think we still want to, and you see, business owners will say, well, if we get 18, I think I'm going to just hold off another year or two and try to get 22 or 24.
Yeah.
It
Yeah.
can work out that way, but it doesn't always work out that way. So, you're taking a little bit of a risk. You know, in those two instances, good or bad, based on, I should have sold 3 years ago, or I'm going to get way more than I thought if I keep at this and for 2 more years.
Yeah.
What advice would you give a business owner to know, like, now's the right time? You
Yeah.
can't really know, but like, what are some things that they can do to not get too greedy and really get the value that they need and want?
I think one thing is to remind them that we don't get younger. That's one thing. One other idea is to remind them of what their spouse wants. And third would be, even if you decide like I'm going to sell now, you're still in it for 2 more years or whatever. That's so common now with earnouts, and you're stuck and you might roll over equity. Even if you're going to sell like right now, you're still not out tomorrow. Even if you think you are, you're not. So that's if you're going to hang on for another 2, 3 years, would you then like to add 2, 3 more years? Like, probably not. So that links back to like take the deal today.
Yeah, I mean, would you say, like I said, you can't say for certain, but in your experience, you know, taking the deal now is, at the right number, that makes sense for you.
Yeah,
Obviously, if the
yeah,
numbers aren't right, then you're not going to sell now. But if you're able to get what you want or even more, would you say more cases than not take the deal now as opposed to, wait to the future?
yeah. I would even say take even less if the terms are right for you. So you might want to take less than you wanted, but with the terms that works for you. Because again, the price can be anything, but the terms is really where it makes some difference. Like if you really like to live right now, well, you will need to take a haircut. If you're prepared to do more, yeah. So I would say yes to that. I would even say take less than you wanted, assuming that you get something else. Which leads into another interesting thing that when I sold my baby, I still got my sons. When I sold my business baby, that was basically my nest egg and my golden goose, and I killed it by exiting basically. And that's the case when you exit like a large property portfolio. Yes, the uplift would be sufficient to sustain your life. But when you do that, you change your persona so much. Like I used to be Fredrik, the owner of Boom, and now I am Fredrik. Like without the boom. It's changed a lot when it's very much your personality and people know you for exactly that, and that's how you've been working and operating for years. It makes a huge difference when you sell your baby. It's a huge thing, which links back to like, is the price worth you changing your persona? What are you going to do instead?
Yeah, I mean, good, and to that point, have the conversation as an M&A advisor with your client about what that looks like. Have a conversation with the spouse and make sure that there's an alignment there. A lot of times, and understand where this is coming from. Is it the business owner who wants to exit? Is it, the spouse saying, "Hey, I think it's time. You've done this for 45 years. Let's spend some time together." But understanding, what that looks like after the sale, because yeah, you're absolutely right. That business becomes your identity, and you are the business, and the business is you. And it's hard to change that mindset. And so that's where, like you said before, structure can be a way to ease out of the business. And maybe you're spending less time, and you're just consulting, and maybe you want to roll some equity, but you're bringing on a partner who can run the day to day, and you're there as needed or whatever, and still get a second bite at the apple in 4 or 5 years.
Yep.
So then you can
Yep.
make sure you get that extra, amount of money. Maybe it's not what you want now, but it can be in the future. So yeah, like I said, I think
Yeah,
structure is
exactly.
huge.
Yeah, no, good point. Same with earnouts and so on. I also seen many people that because they've been self-employed for decades, that means they're not employable. That means that they're not the right person to have a boss, maybe a very demanding boss who cares all about the numbers, like any typical private equity firm. And you might hate numbers. So that I've seen many people walk away from so-called earnouts. Make sure you got enough money on day one, assuming that you're a bit hesitant about the earnout, because often they are structured, again, many cases so that you basically walk away with nothing out of the earnout because you literally walked away and took that part of the deal instead.
Yeah, like I said, we could talk deal structure all day long, and
Yeah.
a lot of great examples.
I'm just waving red flags here. Go ahead.
You mentioned, Fredrik, that you have a book coming out in January.
Yeah.
Tell our listeners about your book and why you wrote it, who's it for, and why our listeners should go check it out when it comes out in January.
Spoiler alert, it will be a bundle. So the whole idea of the first book is called The Abyss of Finance, which is all around how you can work with trust, leverage, understanding how does the financial system work behind the scene. How does a bank work? How does the government work with interest rates? There are so many so-called financial instruments that you don't have an idea about. This is not a how-to book. It's just like opening your eyes, making you aware of like the potential, because I've lived through a number of corrections in the market. I'm just making it obvious that we are due for another correction. Just be careful when you're buying or selling a company that it will affect you. So that means that if you're going to sell, think about where you place the money. If you are going to buy, don't overpay, etc. So it's called The Abyss of Finance, and I will sell it together with another book which has got a complete different reason, which might be of more interest to the business sellers listening to this podcast, because guess what? It's perfect. It's you. So it's called option strategy. You've got 3 options. You can keep doing what you're doing, run the company that you're doing. Number 2, you can work with someone like Nick or myself to like increase the value of your business, make it more sellable. Or number 3, you can work with someone like me who would like to do option 2 in partnership. So basically a part of a group and growing together, like I mentioned with a private equity game. So most of you will just keep doing what you were doing, and that's perfectly fine, but try to become more sellable. There's so many good, easy books out there, many good advisors that can help you to get things in order, because you might be sick, you might be, there are many reasons why you might not want to sell your company, but you might have to, or someone have to sell it on your behalf. So make the business more sellable, and you will get more money via Nick when you actually exit.
So where can our listeners find those books?
Yeah,
when will it launch?
Yeah, so it will be launching on the 9th of January. So the option strategy and the Abyss of Finance, it will be a bundle. So yeah, check it out. Follow me on LinkedIn. You will for sure not miss it.
Awesome. Well, Fredrik, this conversation has been amazing. Thank you again for hosting me on your show. Thank you for coming on this show.
Pleasure.
And where can our listeners find more information about you?
So the best place to find me is on LinkedIn, Fredrik Sandvall, Swedish spelling. Nick will for sure put it in the show notes. And if you Google myself, I will be the first to find so that's easy.
Yeah, definitely connect with
perfect.
Fredrik on LinkedIn. That's nice. Always a good place to go to. He's putting out a lot of great content. Check out all the stuff that he's working on. Make sure to, check out his books coming January 9th. Good first book purchase of the new year. And check it out, and check out his podcast. Tell us where we can find your podcast. Again, name of a podcast and where we can find it.
Yeah, so invest in you, and you can pretty much find it on any podcast player that you like to use, Spotify, Apple, whatever.
Sounds great. And make sure to check out mine and Fredrik's episode in early January as well, about the same time when the book comes out. So it'll be a good time.
Exactly. But really, you should check out that it's basically Nick has been doing this for hundreds of episodes, and that's his masterclass, his conclusion of everything. So yeah, take it or leave it.
I did not pay Fredrik to say that.
No. But I mean, usually Nick is asking all the great questions. Now he's synthesizing it into a masterclass.
Yeah, I'm on the other side of the microphone, right?
Yeah, I know. It's hard.
Fredrik, appreciate that. That means a lot to me. Thank you. Glad we're able to connect. And make sure to check out Invest in You, Fredrik's podcast, as well as check out his books when they come out on February 9th. And thank you for joining us for this episode of the Mastermind Podcast. Make sure to like, comment, share this with anybody who think might benefit from our conversation. Make sure to subscribe. However you're listening to podcasts, make sure you stay up to date on the new episodes coming out in the future. Until next time, everybody, take care. Thank you for listening. Thank you for joining us on this episode of the M&A Mastermind Podcast, and a special thank you to our presenting sponsor, Cornerstone International Alliance. If you enjoyed today's discussion, don't forget to like, share, and comment. We'd love to hear your thoughts. Make sure you hit that subscribe button so you never miss an episode. We'll be back next week with more insights, strategies, and real-life experiences to help you take your M&A game to the next level.